Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Agama Syawal bin Salman, and I will present about issues that related to Islamic unit trust. Right. Firstly, about issues that related to Islamic unit trust. So the common issue is between Islamic and conventional Islamic unit trust. So the compliance with Sharia law is the key feature that distinguish Islamic fund management from conventional investing. So Islamic funds must engage in economic activities that related to Sharia compliant and invest into enterprises that meet Sharia standard. So the speculation of Islamic unit trust is mistakenly equated to gambling, and they say that it involves a great deal of computation, which in the highly developed computation techniques of today can hardly be a game of chance. The next issue is the diversity provided by an Islamic unit trust is perhaps its most attractive feature, which on the flip side can also provide room for uncertainty. The fact is an investor buys into a basket of underlying equities. In some cases, there are stocks which do not comply with the binding Islamic requirement. So the solution is rebalance the stock, look for similar characteristics of the stocks and include as replacement. For similar characteristic is for the stock that do not follow the Sharia requirement, and find the similar characteristics as the stocks and include it as a replacement, and maintain the portion of the non-approved counter in cash. The next issue is global investment. So the ability to gather information to analyze global companies or issues to determine whether it is Sharia compliant. So in classifying these securities, the approved securities, Sharia Advisory Council, which is SAC, has applied a standard criterion in focusing on the core activities of the companies listed on the Bursa Malaysia. So the companies that have both permissible and non-permissible must have good public perception or image, and these companies need to make their companies for the core activities are considered as maslahah, which is a benefit to ummah, and for the non-permissible thing must be very small and involves matter of umum balwa, uruf and rights of non-Muslim community that accepted by Islam. So the next is selling unit trust product outside Malaysia. So it was about legal and regulatory issues and acceptance by Middle East investors of Malaysian unit trust product, differing Sharia opinion and rulings, and differing accounting standards. Alright, next is example of Islamic unit trust. So there are three major ways to start investing into a unit trust. So the first is a lump sum purchase, which is the investor that have lump sum money go invest into a unit trust. So it took about over a period about 3 to 20 years, the investment will increase as distribution and other income is earned by the fund. So the second is regular savings, which is an ideal, disciplined and useful way to accumulate capital for a future need. And the third is EPF savings, which is we call it as KWSP, investing using EPF member investment scheme and transferring amount from members account 1 to approved unit trust funds. So next is IETFs, which is Sharia compliant exchange traded funds. It was Islamic traded fund that were funded by Sharia compliant, a publicly listed index tracking fund established as a unit trust scheme or any other permissible structure with the primary goal of matching the performance of specific index. So the management of IETF must strictly observe the Sharia principles and Islamic investment guidelines. A fund shall be made under comprehensive Sharia screening exercise before it can be qualified as an IETF. When units in IETF, investor will gain exposure to geographical region, market, industry and commodity like gold and oil, and about growth and value. Investor can determine Investor can determine their exposure by looking at the underlying benchmark or the assets that held in the ITFs.